Welcome back to Investing Talk podcast. Today we're analyzing the complex world of biopharma. We're going to tackle one of the big questions we often get from you, our listener. Is Metsera a good time to buy now? This company, it's really focused on these novel therapies in oncology and immunology, and it represents that, classic biotech investment profile.
Absolutely. Incredible potential reward, but balanced by significant, potentially devastating risk. It's high stakes.
It really is. So before we dig into the financials, the pipeline, the charts, all that good stuff, please remember to subscribe, like, and comment on this analysis. And hey, if there's a specific company or maybe a sector you'd like us to look into next time, just drop us a comment below. We really are guided by your curiosity.
And our goal today really is to cut through the noise, maybe some of the excitement around biotechs like this. We're here to synthesize the highly complex financial, clinical, and technical data that's out there on Metsera. We want to give you an objective, clear outlook. We need to look at what truly drives this stock. And that isn't just the science, right? It's cash, it's risk, and it's timing.
Okay, let's unpack that financial foundation first then, because Metsera is like a perfect case study of an emerging biotech. They're focused on developing these novel, small molecule and biologic candidates, mainly for oncology and rare immunologic disorders. But when you look at their recent books, you're immediately hit with this jarring financial paradox.
Yeah, what's fascinating here is just the sheer scale of the top-line revenue growth. I mean, for fiscal year 2024, Metsera reported $14.2 million in total revenue. That's a stunning 112% year-over-year growth from, $6.7 million in 2023. The number looks incredible on paper, in a press release.
It really does. But we've got to look behind the curtain, right? The sources we have make it very clear. This growth was almost entirely driven by clinical milestone payments from larger partners.
Right, partner cash.
Exactly. Not revenue generated from actually selling drugs to patients. So it's highly non-recurring revenue, basically tied to hitting R&D goals.
And that leads directly to the other side of this paradox, the cost structure. The net loss for 2024, it hit $90.3 million. And we really need to talk about the gross margin. It was, intensely negative, minus 288%.
Wow, minus 288.
Yeah. That figure tells you instantly this company's running huge deficits because the cost of just advancing its clinical programs, the R&D, it just far outweighs the limited, milestone-driven revenue they bring in.
So, okay, massive losses, but the paradox sort of continues when we check their balance sheet health, doesn't it? Despite those huge operational losses, their liquidity looks, surprisingly robust. As of the end of 2024, their current ratio stood at 3.7x.
Pretty strong.
Which signals they have ample cash and equivalents to cover their near-term liabilities. And their long-term debt seems manageable at $27.9 million, mostly in convertible notes. So how do we reconcile that shocking negative margin with the, comfortable liquidity?
Well, the current ratio is strong because they've managed their cash raises and liabilities pretty effectively, it seems. The negative gross margin, that's almost an expected feature of pre-revenue biotech. They're basically building the product, the drug pipeline, before they can sell it.
Right.
The market kind of accepts those losses, provided the cash runway is long enough.
Right.
And this brings us to the cash figures, which are probably the most critical data point we have right now.
And here's where the story takes a major turn. At the close of 2024, their cash position was $142.3 million.
Okay.
But then a Q2 2025 update reported a significantly stronger cash position, $530.9 million.
Huge jump.
That's nearly a $400 million influx in just 6 months. So as an investor, you have to ask, where did that money come from? And crucially, what was the cost? Was it dilution?
That delta, that difference is absolutely crucial. If that money came primarily from, say, an equity raise, it means recent shareholders got heavily diluted. But if it came from a substantial, maybe unannounced milestone payment from a partner, that's a huge positive signal about their pipeline's progress.
Okay.
Given the focus on accelerating R&D, especially this new expansion into metabolic diseases we'll get into, it's highly probable it was maybe a combination: equity financing and strategic partnerships. Either way, that $530 million, that's the number investors are focusing on now. It essentially guarantees runway well into 2027, even with their high burn rate.
And speaking of burn, the net cash used in operating activities back in 2024 was $57.9 million. But if we annualize that Q2 R&D spend you mentioned, the $60.5 million, the burn rate is clearly accelerating. So while $530 million feels comforting today.
Yeah, aggressive R&D consumes capital very quickly. That cushion can shrink faster than you think.
Okay, let's move on to segment 2 then. competitive position and those core risks.
Right. So if we connect this now robust cash position to the bigger picture, it allows Metsera to aggressively pursue its pipeline. They currently have 2 candidates in phase 2, plus several in preclinical stages. Their competitive strength isn't just the molecules themselves, though. It's also the partnerships they've managed to secure with larger pharma firms, and that strong backing from institutional investors who seem to trust the management team.
And that Q2 R&D spend over $60 million, that's clear evidence of that acceleration. What's really noteworthy, and something we have to focus on for you, the listener, is the new and pretty aggressive push into obesity and metabolic diseases.
Yeah.
Metsera isn't just an oncology play anymore.
Yeah, that's a big shift.
They are deliberately wading into one of the largest and frankly most competitive pharmaceutical markets in the world right now.
And that new direction, while exciting, it definitely elevates the risk profile quite dramatically. They're using this new cash to fund this really ambitious expansion. So you, the learner, need to be acutely aware of the unavoidable risks here. The primary risk. It's simple, almost existential for a biotech. Clinical trial failure.
That's the big one.
This stock trades purely on data. A delay, or worse, a failure in trials, especially for their lead candidate, MTS-101, or that pivotal upcoming VSPR1 data. It would instantly vaporize maybe half the valuation and compromise their ability to raise future capital. It's brutal.
That's the science risk. Okay, let's talk about the business risk, which ties right back to that capital raise. We mentioned dilution. Aggressive R&D requires constant cash infusions, and if that pivotal data is negative, that $530 million will start looking thin pretty quickly, won't it?
It absolutely will. They'll need further equity raises, almost certainly severely punishing existing shareholders. That's the dilution risk right there.
Okay, and what if the science works? What happens then?
Well, even if the science is successful, they face the commercial infrastructure risk. Metsera currently lacks established large-scale sales and distribution capabilities. So if they successfully bring a drug to market, they basically have 2 options. Either spend hundreds of millions building their own sales force.
Which drains that cash rapidly.
Exactly. Or rely completely on a partner, which then caps the ultimate profitability of the drug for Metsera. They're kind of trapped between spending more to commercialize or sharing the spoils.
Right, makes sense. And finally, we have to acknowledge the sheer volatility inherent in this whole sector.
Oh, absolutely.
Biotech stocks, especially those hanging on binary events like trial results, they have a high beta. They don't just move with the market. They swing wildly on macro factors, regulatory comments, competitor news.
It's speculation, really, not stability. You need the stomach for it.
Definitely. Okay, let's shift focus now in segment 3. Let's look at the technicals and market sentiment. How has this binary risk profile translated into the price action on the charts? We're looking at data as of September 2025 here.
Yeah, and this stock is just defined by volatility. It's traded in a pretty wide range, $28.50 up to $36.20 over the past 3 months. It feels like it's coiling maybe ahead of that November readout.
So what are the key levels traders are watching?
Well, technical traders are definitely watching key levels that seem to reflect institutional buying conviction. We've seen strong price support observed pretty consistently near that $29, $30 barrier. It's highly probable that this support level is where some institutional money entered, perhaps following that July 28th announcement.
Ah, right, the July announcement. That's the key connection. Remember that announcement. Positive interim phase 2 results for MTS-101.
Yep, the lymphoma candidate.
That data fueled an immediate 12% rally, and that $30 level likely represents the base of confidence established by that news.
Exactly. So if the stock were to break below $30 now, it might signal that the market has lost faith in the upcoming November VSPR1 readout, almost regardless of how strong the other fundamentals look on paper.
And on the upside.
Conversely, we see firm resistance noted in the $35.56 to $36.50 range. That $36 level is kind of acting as a psychological ceiling right now. Breaking that resistance before the November data would be a pretty strong indicator, potentially, that smart money is aggressively positioning itself for a positive surprise.
Okay, and the trend?
Technically, the short-term trend looks, well, positive. The 50-day moving average, around $31.90, is sitting above the 200-day average at $30.30.
I think it's fragile.
Very fragile, entirely dependent on the next catalyst, the next piece of news.
Okay. Turning to market sentiment then, what are the analysts saying?
The analyst community remains, I'd say, cautiously optimistic. The consensus is sort of neutral to bullish. We see two major buy ratings and one hold.
Hmm.
And the price targets, they range from $36, right at that resistance line we talked about, all the way up to $44. So that suggests significant upside potential if the data delivers.
And what about institutional activity, insiders?
That's also quite compelling. We noted some, well, marginal net insider buying back in May 2025. It wasn't a flood, but it signals that management is confident enough to put some of their own money on the line.
Always a good sign, however small.
Right. And more recently, Corebridge Financial revealed a notable institutional purchase in September 2025. When you see large funds building positions right before a major binary event,
Yeah.
it suggests they have strong conviction or maybe access to modeling that favors a positive outcome. They're essentially betting on the science winning out.
Okay, that leads us perfectly into segment 4, the upcoming catalysts. The binary events themselves, we've outlined the high stakes, but these risks and rewards, they're all concentrated into, what, 4 specific crucial dates on the calendar?
Pretty much.
For pre-revenue biotech like Metsera, these upcoming clinical data readouts are absolutely make-or-break events.
Yeah, this raises the really important question of short-term timing, particularly if you're an active investor looking at this.
Yeah.
We have 4 major events coming up rapidly. First, there's the Q3 earnings report on October 29, 2025. Now, investors won't really be looking at revenue there.
No, they'll be scrutinizing the cash runway.
Exactly. Cash runway and the R&D spending trajectory, especially any updates regarding that new metabolic program. How much are they pouring into that?
The big one, the moment of truth, November 15th, 2025.
That's the date.
This is the scheduled date for the VSPER-1 Phase 2b interim data. This is widely viewed as the most pivotal near-term catalyst.
Absolutely critical. If this data hits the efficacy and safety targets, the stock could immediately re-rate, maybe break out of that 30 stocks of resistance range and move towards that analyst high target of $44 or higher, potentially.
Okay, what comes after that?
Following that, we expect the final Phase 2 trial readout for MTS-101, that's the lymphoma candidate, sometime in Q4 2025. And finally, the ASH conference, the American Society of Hematology, in December 2025. That will likely provide a platform for further, more detailed clinical updates across their entire oncology pipeline.
So those 4 events are really going to define Metsera's valuation for the foreseeable future.
For sure.
But beyond the confirmed trial data, there's also some serious speculative buzz, isn't there?
Oh yeah, there always is with these stocks. We've seen some internal company mentions of a planned IND filing that's an investigational new drug application for MTS-202 in mid-2026. That would expand their core oncology pipeline into a new area.
But the most significant speculative drivers seem to relate to potential M&A, right? Mergers and acquisitions.
That's right. The rumor mill is really churning, primarily because of that new focus on obesity and metabolic diseases we mentioned. Speculation persists about potential collaboration or maybe even licensing talks with a top 10 pharma company interested specifically in Metsera's GLP-1 portfolio.
GLP-1, the hot area.
Exactly. When you throw a potentially successful metabolic candidate into what was primarily seen as a high-risk oncology company, you suddenly create a very interesting, maybe unexpected takeover target.
So we could be talking about Metsera potentially becoming, the belle of the ball for big pharma, looking for a quick entry into the massive obesity space.
It's possible. Who's got the checkbook ready? Pfizer, Lilly, Novo Nordisk, they're all looking.
And let's not forget the chatter about possible eligibility for an accelerated FDA pathway, something like fast track or breakthrough therapy designation for MET097I.
Right. Any one of these rumors turning into reality, an M&A bid or an accelerated pathway approval that would trigger a massive, almost immediate shift in the stock price, independent of the scheduled data readouts.
Okay, so wrapping this all up, what does this mean for you, the objective investor listening right now?
Well, our overall rating, based purely on balancing these, high contrast factors, lands around a cautious but maybe optimistic 6 out of 10. The strengths are pretty undeniable. Robust cash position, now over $500 million, a rapidly progressing clinical pipeline, and that institutional accumulation we saw ahead of the data.
But the weaknesses are equally stark and potentially fatal for the investment thesis. 0 current profitability, intensely negative cash flow, and that significant binary clinical risk centered entirely on that November 15th data readout.
Right. This isn't a valuation based on current sales or earnings. It's purely a bet on future science succeeding.
So who is this stock actually suitable for?
Therefore, we'd conclude this stock is really suitable for 2 very specific types of investors right now. First, maybe short-term traders seeking to capture momentum around those binary events.
But with extreme caution.
Absolutely. Requires extreme caution and very tight risk management because of that inherent volatility. Second, it's only appropriate for aggressive, long-term investors who have a high risk tolerance and strong conviction in the ability of Metsera's management to deliver positive clinical trial outcomes.
So if you're looking for portfolio stability, steady eddies.
This is definitely not the investment for you, at least not at this present moment.
It truly is a high-stakes, kind of all-or-nothing moment for Metsera, isn't it?
Indeed. And here's maybe a final provocative thought for you, the listener, to consider as we wrap up. If that VS/1 data in November is positive, showing both efficacy and safety, how quickly might Metsera pivot its entire narrative and its valuation from being primarily seen as a high-risk oncology play to becoming an unavoidable, maybe immediate takeover target for those major players who are desperate to dominate the metabolic disease space? The market will start pricing in that M&A scenario very, very quickly if the data looks good.